Welcome back to the Rollup. For today's episode, I sat down with Ganesh from Covalent to discuss many things happening in the modular realm. I talked about the convergence of the roadmaps in Ethereum and Cosmos, as well as the challenges faced by Cosmos zones and the need for constant hard forks. We talked about scaling data availability, what's next for Celestia, as well as the broader data availability scene, and how long-term data availability plays a part. We also talked about competition within Ethereum and within the modular space, as well as the challenges and the dynamics of the private market investing space today. Hope you guys enjoy this episode. Let's jump right in after a quick word from our amazing sponsors.
Welcome aboard on our journey into the singularity. This is the endgame roadmap for Frax and Fraxtal, the new L2 out of the Frax ecosystem that is totally based on fractal scaling. Fraxtal is a modular L2 blockchain built by Frax with modular and fractal scaling in mind. Fractal scaling is based on the Mandelbrot set of fractal images, and it explains how L2s become L3s and the entire appchain lifecycle goes through its evolution. The Frax ecosystem is made of some of the top builders in the space and has stemmed from its OG days of the Frax stablecoin. It is now in the LST space, the LRT space, and this Fraxtal L2 joins the existing suite of Frax products, including Frax Swap and Frax Lend. You can see Frax Ferry, the bridge to go from any chain, Arbitrum, Optimism, or mainnet into the Fraxtal mainnet. Bridge your tokens and bring your Frax assets into the Fraxtal ecosystem. Join today to get the best out of Fraxtal. You are still early. Join today. Take part in our expedition into the singularity. Cartesi is your home for app-specific rollups. At the forefront of developing new tools and platforms that enhance the capabilities of blockchain technology, Cartesi enables applications that are flexible and built to scale. Build on a full Linux environment and use traditional software libraries, but in blockchain development. Go to cartesi.io, that's cartesi.io, to learn more about building your own app chain today.
What's going on, guys? Welcome back to the Rollup. Today we have Ganesh Swamy of Covalent to talk about a multitude of, I would say, the current zeitgeist in the market as we have it today. As always, going to dive into some of the technicals. Today, speaking about kind of what's next for modularity, where the roadmaps of Ethereum and Cosmos have converged, where we think Celestia is heading, and also maybe some interesting topics around tokenomics, investing, and the general market space. Ganesh, great to have you on. Fellow Canadian. I told you I was American, but used to have a dual citizenship, but I think my parents took it away for some reason. But maybe we'll have to get that Canadian passport back one day if Gensler keeps coming down. So good to have some Canadians on today. Happy Lake Canada Day.
Andy, a pleasure to be here. Excited to roll into the Rollup podcast.
Yeah, man. You're kind of I'd say an OG in the space. I entered in 2017, but was very young and kind of new. But you've seen quite a bit since the inception of Covalent, as well as your time in the space. Maybe you could just speed run some of the maybe more interesting ideas you've seen tried, and also what you guys have spent time on over the last 5-6 years.
Yeah, no, absolutely. So Covalent was an accident. It rains a lot in Vancouver, which is where Covalent is based, which is where I live. And one rainy Saturday, a friend of mine said, you should go check out this database hackathon. And I was a database engineer for pretty much all my career, and ended up attending this hackathon. And I didn't know much about blockchains. This is during the ICO craze, and I was just watching it from afar. I didn't really know what these things were. And so I built this very simple connector that lets you pull out Ethereum transactions in Excel. So just a simple interface. And in the database world, you have to pry Excel from people's cold dead hands, because people love that tool. So it doesn't matter what underlying database you have this unified Excel. That's really what people want to use. So it doesn't matter if you're an analyst or whatever that role is. So built this really simple tool, ended up winning that hackathon, and then commercializing or starting to commercialize the technology. And I think that was in the 2018 kind of era. And back then, the biggest use case of the Ethereum blockchain was ICOs, capital formation, funding mechanisms. And ERC20 wasn't really a thing. It wasn't really used as much because most of these funding happened in ETH. That's really the pair. And then eventually the ERC20s were issued, and then it starts trading and so on. And then over the years, I think some things I could have predicted maybe 5-6 years ago. Some things, took me by surprise. I think the thing that I could have predicted was that there's going to be a multitude of settlement layers, execution layers, consensus layers. And I think in a database world, I kid you not, there's a website called dbdb.io. It's a database of databases. There's over 800 databases out there. People's needs are very diverse. You could have graph databases, you could have key value store databases, you could have time series databases, you could have analytical databases, you could have fast transaction databases. And our vision, or at least our idea, was that blockchains are the same. So you're going to have a spectrum of scalability solutions, a spectrum of security solutions, and needs are diverse, and therefore solutions have to be diverse. And that was essentially the genesis idea for Covalent. The word covalent comes from covalent bonds. I don't want to bore our audience with a chemistry lesson here, but I used to be a physical chemist early on in my career working on cancer drugs. And so here, covalent is the binding between blockchains and databases, or Web 2 and Web 3, centralized systems, decentralized systems. And so that's really the analogy there. And so, so Covalent, got it off the ground. It took a while to actually build the tech. It took about a year and a half. And, it's not a traditional startup per se, in the sense that most startups, if you go through the Y Combinator school of startups, you have to find your initial customers, you have to charge, focus on growth. They suggest a 10% week over week growth, and and then you have your demo days, and then you have this urgency mechanism to raise capital, and then you go to market, and then you have the clock that's starting to tick for your Series A, and it's a very standard kind of like cookie cutter kind of template. I think the crypto space, has its own kind of like funding cycles. A lot of these funding, like if you're like a token project, happens like beforehand and so on. I think there's just a completely different kind of like life cycle you have to understand. So it took a couple of years to get it off the ground, and we bootstrapped the company for the first couple of years. And we're in a fortunate position that we didn't really need outside capital. And we got the company profitable with some actually really big customers like Consensus. They were one of our earlier customers. And then, that was the birth of Covalent. And then I think there's more that happened in, I would say, the last 2 years compared to the 2 years prior. And it feels like almost like the timescales are getting compressed now. And so, you had a whole season for DeFi in 2020. You had a whole season for NFTs in 2021. And now it seems like, things are moving a lot faster, experiments a lot faster. And I would give credit to the infrastructure layer. People say, everyone's building infra, who's building the apps? But I think because the infra has become so easy to use that now the applications, you can just start to iterate. Like, you have stable coins now. You didn't have stable coins in 2018, 2019. You have these embedded wallets now. You didn't have that like 2 years ago. You have all these other like DEXs and infrastructure. So you can trade basically any token without having to go to a centralized exchange and pay the listing fee and, do all of that traditional stuff. So I think it seems like progress is slow, but I'm actually very bullish for the future.
Yeah, 100%. interesting story. Lots of points. 2018 was a wild time because it was like, is crypto going to survive this? It wasn't like this bear market. This past one was like, okay, we're good. Like we got to just one more liquidation, then up only. 2018 was like, okay, like is this actually going to come back? I remember like Kobe buying the candle at like 3K, 3,400 on Bitcoin and being like, this is the bottom on Twitter. And that actually meant the market in the bottom. Anyways, that was wild times. Fast forward to now, and as you said, like this thesis of many execution environments, many chains is kind of happening. And we kind of saw that with Cosmos. We saw that like Cosmos decided to start out building this network of chains interconnected through basically IBC. And Ethereum was like, we're just going to build one layer and then eventually kind of scale. And so like I kind of have this mental model of these roadmaps converging in a way where Cosmos is now, I think, trying to figure out the UX and interoperability and kind of bringing things together and like enshrining more, and even certain chains within Cosmos are actually scaling more vertically. Like Osmosis, for example, is trying to add different application stacks within their one chain. And there's other examples as well. And then Ethereum is like, well, we need to figure out how to get off of this main layer and scale through rollups. And then there's also trying to kind of figure out how to put those together. You have some interesting history with both ecosystems. So I'm curious about your thoughts on this convergence of the roadmap theory, kind of how you see Cosmos may have had the idea right, or but the execution may not have been the best, or there's been some interesting situations there. So let's kind of dive into this idea here.
Absolutely. So with Ethereum, what comes to mind is Charles Darwin's quote. In his book, he says, it's not the fastest or the strongest organism that survives. It's actually the organism that's most adaptable to change. And Ethereum is going to win by default because no single idea comes from the Ethereum camp. They just absorb ideas, and Ethereum is actually a concept. It's not a specific set of technologies. And so I remember back in 2019, 2020, you had the rise of ETH killers. And I think Near in particular was executing on the ETH 2.0 sharding roadmap faster and better and cheaper than Ethereum itself. But what Ethereum did is completely abandon the sharding idea and moved to the rollup ecosystem, the rollup roadmap. And so that whole point with sharding just became moot. And so I think that's really the benefit of Ethereum. It's the community, it's the social layer, and it's not one specific piece of technology. And this is why a lot of the biggest and greatest apps and experiments start in the Ethereum camp and not anywhere else. There are other pockets of innovation for sure. Solana has a lot of innovation too, but I think Ethereum is where the bulk of developer interest and a lot of the native apps appear before anywhere else. And so that's like super interesting. Now, talking about Cosmos always had this idea with sovereign blockchains, and it kind of makes sense that sovereign nations, sovereign blockchains are a must because again, people want to control their destiny. They don't want to be beholden to a superpower, right? And so we have that. I think the U.S. does a better job here with the states being having their own agency. And I think in Canada, it's less, the provinces have less of an agency. So I think, a US kind of setup where it's just an amalgamation of states is a better setup for people's ideas and the roadmap they have. And so I think Cosmos had that idea pat down. So every zone has its own parameters, has its own systems, and they use IBC to transfer assets between because you have to talk, you have to trade, you have to it just goes back to the basics of economics where you focus on your core skills and then you outsource or you trade everything else, right? So you have single purpose, vertically scaled Cosmos zones for different use cases. Now, from a technical standpoint, there are some challenges with that. And I think Ethereum has just executed, I would say, differently and perhaps more in a more user-friendly fashion compared to how Cosmos has done it. And I think one of the key challenges in the Cosmos ecosystem, which ties into some of the work that we're doing today, is this habit of Cosmos zones doing a hard fork every time they have to upgrade a Cosmos zone. And so what does this mean exactly? So Cosmos is built on the Cosmos SDK. So it's a Go SDK, and you can use it. And they have all these modules built out of the box. So you have a banking module for token balances. You have a staking module. You could have a slashing module, and you can just compose all of these different bits and then create your own basically blockchain. And it's just like just off-the-shelf components, right? And so these components are all battle tested. It's part of the SDK, and lots of zones, lots of Cosmos chains use them. And I think it's an incredible setup. Now, the problem with I think it's a cultural problem. It's not really a technical problem. Is that every time Cosmos wants to do an upgrade, what they end up doing is taking snapshots of the balances, doing a hard fork, completely changing the API and the interfaces, and then propagating the blockchain from there on. So this happens all the time. So if you look at Cosmos Zone, I don't recall what the latest hard fork is, but back in 2020, I think it was like hard fork number 4, and so it was impossible to get the actual ledger prior to hard fork 4 because you basically snapshot the balances and you start propagating from there on. And so if you want to have verifiable data, you want to see all of the ledger deltas, the movement of assets and so on, it's basically impossible. And it is impossible to propagate the blockchain from the Genesis block, right? Because the Genesis block gets reset with initial balances each time on. I think that is, I would say, if not the major reason why Cosmos user applications are still lagging behind. And I know this from a first-hand experience because in 2020, as we started to gain a foothold in the Ethereum ecosystem, and we were trying to, by Ethereum ecosystem, I mostly mean the Ethereum mainnet because the other chains were not live then. There was no Optimism, no Arbitrum. And so we wanted to support a second chain using our data products, and we expanded to the Cosmos Hub, and we got introduced to this whole ecosystem of applications. I think there's a wallet called Looney app, which is a pretty cool. It's another Canadian team, really beautiful app. And the problem they had is that as they were supporting, let's say, a dozen different zones, and they had this one wallet for all of your assets across all of these disparate zones, but the zones themselves every 6 months or so do a hard fork, and the application, the user application has to redo all of the work. They have to redo the integration work. So now your integration costs are super linear with the number of chains that you support. Unlike the Ethereum ecosystem, where most chains, you can pull out the transactions from the Genesis block as long as you have a full archive node, and you can propagate the entire blockchain, right? So Ethereum mainnet, I think Bitcoin is the gold standard for having access to all historical information, right? Everything is on chain. Ethereum is also really good. You can literally get the Genesis block and then propagate the entire blockchain to where it is today. Same thing with the rollups. And Arbitrum had this little bit of a hard fork where they switched over the balances. But Arbitrum, zkSync, Polygon, everyone, that is essentially the standard, right? So you should be able to pull out any transaction, any token balance at any block height if you ran a full archive node. Now, a full archive node may not be feasible for everyone, right? It's mostly the exchanges and the custodians and indexers.
What is an archive node? Like, what does that entail?
So the nodes can be configured in multiple ways. So I'm going to use the nomenclature for Ethereum. So there is a archive node, there's a full archive node, and there's a light client. And these are the three primary roles that you can use. You can configure your node. So before like the easiest thing to start is with just a full archive node, which is you download every block, all of the transactions, re-execute the transaction so you get basically the full trace, and then you store all of the historical information from the Genesis block. And as you can imagine, with a busy chain like Ethereum, This will lead to terabytes of data. Plus, it's also super slow because you're basically serially executing the transactions or re-executing the transactions. But that's basically how you're able to verify that the transaction and the transaction outputs match exactly, because the propagation happens block by block by block, right? So there's a complete continuity from the Genesis block. Now, Ethereum's ethos is to enable people who can stake Ethereum at home, which means you need lighter nodes. So this is where you have from the full archive nodes to just the archive nodes, which don't do the execution, to the light clients that only have the block headers. They don't actually have all of the transaction information. And then you have pruning, where in the database of the node, you delete the old data because there's no need to keep that, because all you care about, a node's entire purpose is to just propagate the blockchain, right? It's not really to access historical information.
Right.
And this comes back to the key aspect that blockchains are actually billboards. They're not databases. So that is a key insight that we came across maybe a couple of years ago. So blockchains require information like a billboard where you post information on there, and then you wait for other nodes to challenge that during the challenge window, and post-challenge window, which could be 2 weeks, for example, if you're an optimistic rollup, you don't need that transaction data. So you just delete it, prune it, whatever, it doesn't matter, right? Because you've propagated, and you just keep the commits from those transactions to propagate the blockchain. So I think that is how the node landscape has evolved. And this is basically how most ecosystems work. Some newer blockchains don't have light clients. They don't have all of these other features. The only way to run it is a full archive node. Covalent supports over 200 blockchains, and I think there's at least, I would say, 20, 25 blockchains that don't have a light client. So the only way to run it is a multi-terabyte kind of, especially these faster blockchains that have sub-second block times. It just gets a lot of data, right? So it's just an efficient way to have everyone participate in the ecosystem.
Yeah, when I think of light clients, I think of data availability sampling and kind of not needing to download all of the data on different blocks to be able to verify that it's been posted and that it's that it's the correct information effectively. Why is this so powerful for blockchains? I mean, I think we've kind of addressed it a bit, but even deeper, like what has the evolution of light clients further enabled in the space as you've seen the development of more and more iterations and things like DAS coming online with Celestia and other solutions?
So let's take a step back. It's not always a fair assumption that everyone believes in a light client kind of stack, right? So take Solana, for example. Solana is known as for better or worse, a data center chain. So what it means is you need heavy gear and bare metal hardware to run a Solana node. The Solana stakers and the Solana node operators are some of the most sophisticated, technically competent people if you want to run it at scale. And that is diametrically opposite to the Ethereum ethos, where they do not want a data center chain. They want solo stakers at home who are able to run these nodes without a lot of configuration. So I think they value different facets. Now, let's take a step back and understand what is happening with transaction data on chain and why you need data availability and data availability sampling, and what's unique about Celestia as opposed to some of the other DA layers. So before you had this DA layer, before you had modular blockchains, basically a blockchain like Ethereum has the execution environment, which is the EVM, has the settlement layer, has the consensus engine, and also has the data on chain. So take an example of these rollups. So these rollups, what they do is they take the computation off chain, right? So it's usually like a centralized system or whatever, it doesn't matter. And then they post the transaction data at the end of whatever that epoch on the rollup to the Ethereum mainnet. And before the deck couldn't upgrade, all of this was going in call data. So if you go to Etherscan and look at the top gas guzzlers, before the deck could upgrade, the top gas guzzlers were always these rollups, the sequencer posting the transaction data on Ethereum. So you could see Arbitrum and Optimism and zk-Sync and Polygon and all these different chains just posting all of their data. So even though your data has scaled, your execution is scaled with an off-chain system, with a rollup, your L1 is still congested because the more the number of rollups you have, you're coming back to the same problem. And now the gas that you pay on the L2 is essentially a pro rata share, or it's just subsidized by the cost of the L1 sequencer posting that data on chain on, or the L2 posting on the L1. So that's passed down to the users. So there's a floor on the shared resource, which is on-chain data availability, right? So that's like the fundamental congestion point. And so from there, what has happened is there's multiple solutions to scale that data availability. So the approach that Celestia and EigenDA and Avail, and I think there's one from Near, what they do is that you post the transaction data from the rollups to this another, could be a blockchain, could be some kind of ledger, could be some kind of system. It's not always a blockchain. And then you hold on to the data for the challenge window. So the other validators post challenge. And if the challenge is accepted, and that means the data is fake, then you get slashed and so on, right? And then you just post the result or the commit of that transaction hash on the L1. So that's one way to scale, and that is how blockchains that are using Celestia to scale are able to not compete for that expensive on-chain data availability on the L1. So that is one solution that is that's very popular. Celestia has about a dozen rollups that are now actively using Celestia. I believe Manta is one of the biggest rollups to use Celestia as a DA layer. Now, the other solution that has come from the Ethereum camp is to segment out the DA to blobs and to on-chain DA and make this an opt-in. So with the Deccan upgrade, what has happened is now you have a new fee market for blobs. And one of the most interesting things that has happened is that basically all rollups have now started to post their transaction data to the blobs rather than using on-chain DA, which is the call data, or using a Celestia-like DA layer. And what is incredible is because it's an alternate gas fee market, if you look at the cost of posting blobs, it's most days it's under 1 Gwei. So what has happened is Ethereum has become dirt cheap because you don't have all of these rollups, for a lack of a better word, I'm saying spamming the on-chain DA. So that's like incredibly scaled. If you look on a day like today, I think it's like sub 10 Gwei, like the gas fees on Ethereum. It's ridiculous. Like, is this a bull market? I don't know. It's like, it's crazy what's happening here. So that is one other approach to scale like DA. So those are the spectrum of solutions that's available to rollups, so that you're able to secure your transactions, your off-chain compute essentially, and post it on the L1. But because it needs to be secure, the DA layer or the blob has to have the same economic security as the L1. Otherwise, what would happen is that if Celestia did not have the same security as the L1, you could fake the data on Celestia and post garbage data on the L1, then the rollup data can no longer be trusted, right? So that's another key requirement here for making sure the security scales along with the throughput.
Mantle is a layer 2 blockchain with one of the biggest on-chain treasuries in all of crypto, and they had a 100-day campaign called Metamorphosis live now. What this is it is a campaign for their liquid staked ETH token, METH, as well as their upcoming liquid restaking token, CMETH, where you can utilize this token on the Mantle network in a variety of different apps, some of your favorite restaking protocols and DeFi protocols, and earn yields in the form of powder, which will eventually be turning into a governance token. Mantle's been around for a while. We like them because they use their own form of EigenDA. They have a good ecosystem and they're growing. So check out this 100-day metamorphosis campaign and hope you guys enjoy the rest of this video.
Makes sense. Yeah, and Celestia has like a fallback mechanism as well in case something happens to the chain that falls back to Ethereum DA. I think other data availability providers will do something similar to kind of help roll-up operators feel comfortable using their solution. I have a question on Ethereum's, and I think we can talk more about the future towards the end here. But like, do you think that Ethereum is moving towards just being like a settlement layer for roll-up blocks for data availability blockchains posting their kind of pointer contracts and their blocks and settling data to Ethereum, and like rollups just posting their data to Ethereum? Like, do you think that the Ethereum L1 is going to move towards like basically having like very few high profile applications that are used by people with significant sums of money, and then the rest of the block space is going to just be used for basically settling other chains built on top of it? Like, is this kind of something that you're considering?
So I would say I believe in that vision where the Ethereum mainnet, the main chain, is a pure settlement chain, which is all the rollups used to sync with each other. But I think it really falls on your philosophy. Is blockchain cheap or not cheap? Is block space abundant or not abundant? So that's really where it comes down to. So if you look even in the Bitcoin camp, there's been so much pushback against increasing the block size because it makes the nodes heavier. And so that's where it tells you what camp you belong to. And so I think block space should be abundant, right? So that's counter to like this blockchain, Ethereum blockchain being scarce, and therefore you don't want to spam your L1 with your your gambling apps, for example. It doesn't make sense, right? So I think that's where there's a disconnect, and the benefit of the Ethereum architecture with all the rollups is that you can innovate at the edges, and you don't have to the Ethereum mainnet itself can reach a state of like almost frozen in terms of its feature sets, right? So all of the pre-compiles, all of the features, all the innovation can happen on the rollups, which as they should, because Ethereum, like the block space is so scarce. So I think that's how the world is moving to. And I think it definitely makes a more interesting world because the pace of innovation definitely increases when you have innovation at the edges.
Yeah, so like Ethereum becomes like this, the narrative for the on-chain world shifts to like Ethereum being this global settlement layer almost, which is kind of interesting though, because if we're talking about where Celestia is going next and some of these data availability providers, what you've kind of realized is like you don't even need a settlement layer so much if you have data availability sampling and proofs, whether it be like ZK proofs or fraud proofs. Celestia is moving towards like this, like introducing this like ZK verifier or this ZK contract to bring snarks in that'll allow one-way bridge or two-way bridging from Celestia to sovereign rollups and from the sovereign rollups to each other, and like also allowing that to be their own ecosystem. And now they have their own sovereign rollup ecosystem. I'm curious, like, do you think that Celestia is like positioning to be a competitor to Ethereum from that perspective, as well as like Avail and other data availability solutions that have sampling and proofs and can build roll-up ecosystems on top of them without needing to settle to Ethereum? And like generally, I'm curious what you think is like next for Celestia and kind of the broader modular space as well.
So I think it comes down to where does the value accrue, right? So the most valuable thing is the state. And so if state can be transported across rollups using Celestia, then then your settlement layer becomes moot. So I would say Celestia is starting to think about how more value can accrue to Celestia, how they can capture more of the scaling, I would say, benefits they provide to the ecosystem. Because right now you post data to Celestia and then the data is deleted after 2 weeks because you can't provide this L1 level security forever because it's very expensive. And then that's it. That's the role of Celestia. So what's beyond that? And so I think that's where Celestia will be thinking about how we can hold on to a bigger share of the pie. Right? Why just pass it on to Ethereum and settle on Ethereum? How can we do things a bit differently? And I think these different chains have different, or these different DA solutions. I'm not 100% to be honest, up to date on all the cutting edge research that these excellent guys are doing. But I think that's generally where people would move. There are some people who think that these DA layers are this transitionary kind of like state, like you don't really need DA layers in the long term because your base layer itself will scale tremendously, which is what you're seeing with the blob and the gas fees and blob. There's no need to use a DA layer. You just post directly to the blobs and everything works as is, right? That's exactly like that was the
like for today
the ultimate thing
and for this year.
for today. Exactly. Yeah. So yeah, I think it's a very dynamic market for sure, right? And everyone wants to capture the fees. Everyone wants to be, this critical infrastructure piece. And you don't want to be you don't want to be a billboard, right? Because there's like really no value that accrues there, besides the challenge window.
Yeah, I mean, so the other kind of side of the puzzle for the data availability question and for like blockchains is like you mentioned that they are more of a billboard, less of a database. But from what I understand, when data is posted to Celestia or a different data availability layer, they kind of hold it, if you will, and there's a certain time period. I think it's like 12 to 18 days or something to this extent where they're able to, like, if they need to, go back and reconstruct the blocks based on that data. But then after a certain point, that data just is basically like pushed into like the ether. And so like you guys have thought about this and have put out something labeled the Ethereum Wayback machine. Maybe you could just like highlight why this is a problem, why people should care about like the data after it gets passed on to data availability providers. Why is that important? And kind of the implications of preserving that.
These are great questions. So let's start with what is being posted to the DA layer, right? So what you have is essentially some kind of like commitment to the transaction data. You don't have to provide all the transaction data to the DA layer. So if you look at ZK Sync, for example, the data that they post on the L1 for the on-chain DA is actually not the transaction data. It's a transaction like state diffs. So it may not always be possible to reconstruct the block and the transaction data from what has been posted to the DA layer. It's not always a given, right? So the whole point there is that if it's a commitment, then you can re-execute the blocks in another alternate execution environment that's off-chain, and then match the commits on either the DA layer or the on-chain DA, and then that's how you challenge what has been posted by the official sequencer, if you want to call it that, right? So that's how the system works. So the data is not really that usable. So it comes down to this, right? The data is not usable. The data in the case of Celestia is 2 weeks. After 2 weeks, it's deleted because it's very expensive to have this L1 level security for a very long amount of time, right? The security mechanisms is very different. If you're using on-chain, if you're using blobs are deleted after 4,000 epochs. That's 18 days on Ethereum mainnet. So you can't get any of the historical blobs. If you're using on-chain DA with state pruning, which should roll out in the next year or so, your historical on-chain DA is also being deleted from Ethereum. So where do you get transaction data? How can I say, okay, at this point, this transaction happened? If the IRS were to come to you, how can I post a transaction hash? Where is that? Where's the data, right? So that is the crux, the acute problem that we're trying to solve, right? And I think the whole point of Ethereum and having the transparency and having all of this data out in public is kind of moot if you cannot access historical data. So in the case of these DA layers, what you have an attack called a withholding attack, which is basically you withhold the transaction data so no one can challenge that or the commit or whatever. And so here, this is almost like an ecosystem attack on Ethereum where no one knows where the data is. And this is exactly the problem that we face in the Cosmos ecosystem. As the Cosmos Hub, which is the first zone, went through multiple migrations, hard forks. By the time you were in hard fork number 4, it was impossible to get like transactions from hard fork number 2. Just impossible, because all you had were just the account balances as of that block, and just snapshot it and then restart it with the Genesis block with these new balances, right? So in many ways, you need a solution that keeps Ethereum decentralized. So that is the role, and that is a solution that Ethereum Wayback Machine does. It's a hat tip to the Ethereum Wayback Machine, which if you've used archive.org, you can go put any website, and it just has these snapshots of internet websites going back forever.
Yeah.
So it's kind of the same thing. So you were able to basically get a catalog of all transactions across all rollups that obviously Covalent and the EWM supports at any point in time. And so you're not relying on other centralized intermediaries to access historical data. Because if there's no decentralized solution to get this transaction data at any point in time, then what would happen is you'd have people like Alchemy and these RPC providers and other kinds of vendors, maybe custodians, who would provide centralized access to transaction data. And in our belief system, that makes Ethereum less decentralized, and that's going counter to the ethos of this space, where you want to have more decentralization. And that wasn't a trade-off that we felt was right. So that is the problem that we're trying to solve, and just getting access to historical transaction data across all of the rollups that's supported in the Ethereum ecosystem.
Yeah. And so this is so we have risk, and this might be a silly question, but based on what you're saying, I guess what is the importance of having data from a year ago or 6 months ago, and you explained kind of how the hard forks in Cosmos cause problems for builders and developers, but from your perspective, what are the key points as to why it's so important to have that data? And then going forward, how do you plan to interoperate your solutions into the modular space?
So in the scientific community, we have something called peer-reviewed research, where essentially anyone should be able to replicate your experiment and replicate your results. And so that comes to having verifiable transactions and verifiable data. So essentially, it's peer-reviewed. So what that means is that I'm able to get the same set of initial conditions and the same set of program codes and get the same kind of output, right? There is no question on what is correct and what is not correct. So the ground truth should be traceable. And so if you don't have this transaction data, then essentially the balances and transactions that you read off the tip, whatever is not pruned, is not verifiable anymore, right? It's verified information because it's gone past the challenge window, but it's not verifiable from the Genesis block anymore, right? No one in the Cosmos ecosystem can trace their latest balances. It's just impossible. You just can't. And so this is a very important attribute or facet of blockchains, where your data and your transactions and your balances and all of the key aspects are verifiable, not just verified information. So this should extend to off-chain compute systems, right? So that is really the value in having and solving this problem. Now, why this is practically useful? Having access to all the information in the past is critical for rapid key to. It's critical for any kind of challenge systems in the future. If you have court records, if you have the whole point of having an immutable ledger is it's immutable, but it's not really useful to have an immutable ledger if you can't pull out historical data, if you can't pull out, the past data. So that's really what the point of this archive system is, right? And I think the needs here and the requirements are quite distinct from a DA layer. The security requirements are different. The storage requirements are different. Even the time span things are different. So from an integration standpoint, what this is it would sit adjacent to all of these nodes. And so just as these nodes are posting their transaction data to either blobs or on-chain DA or off-chain DA, which is like Celestia or Eigen DA, they would post their data to the Ethereum Wayback machine as well. And the EWM is able to catalog and store this in this full decentralized kind of ecosystem. So Covalent today has 32 nodes that are dispersed across the ecosystem. And we are coming up with a live client sampling technique as well on how you can scale the verification of these transaction data that is posted on across all of these different rollups.
Gotcha. Okay, so it's like an adjacent add-on to the current solution. I think people kind of like get confused about like data availability and data storage. Two separate ideas here with regards to like the use case for each. One being like verifying of the publishing and verifying of the truth, and the other being like storing of the information for the long term in case of needing of record keeping of past history. It's like you wouldn't want to, I don't know, burn your previous tax returns, right? You would always want to keep those on file. It's a similar idea. So
to be clear, the Ethereum Wayback machine is not a storage solution. We just use IPFS off the shelf. It's that whole mechanism of how that data gets to storage. So that's basically a replicable, verifiable pathway.
Yes. So not a solution itself, but yeah, the process of getting that data off chain or onto IPFS in a decentralized manner is very important. Because if there's somebody that has the power to change it, then you literally can just rewrite history, which is just an extreme problem. Cool, man. Well, I think I have one last question for you. More of a fun one as we kind of wrap up. I thought angel investing was easy. I thought VCs was easy, and everybody's just gonna make a ton of money if you get into the early rounds, and coins are just gonna go up and launch high. And it seems like this isn't happening. It seems like there's an inflection point in the market where there's like this kind of like there's just a lot of projects launching. There's a lot of tokens. You've been around for a while. You've seen a lot of this happen. Yeah, man. Like where are we at in this meta of sustainability with token launches, and kind of what's your general take on how the progression of new projects coming to light and early stage investing in these markets is gonna kind of happen, and is the market becoming more difficult, more sophisticated? What are the current market dynamics that you're observing?
Everclear is pioneering the clearing layer. The clearing layer can almost be thought of as splitwise when you go on a trip with friends, but for the blockchain. What I mean by that is when users are sending cross-chain messages, there's oftentimes fillers and solvers who have balances left on different chains that they need to rebalance and reset their positions. This is where Everclear comes in. Everclear is pioneering a collaborative approach to the chain abstraction future, and they are willing to work with interoperability partners, solvers, and other providers in the space to build a interoperable and chain abstraction future. Check out Everclear at everclear.org, and welcome back to the Rollup.
Very, very interesting question. So I've been an active angel investor for many years now, and I'm only interested in infrastructure projects because I think being part of a project is almost like a commitment to be part of their team. That's how I feel. And as a founder, I really dislike debt equity or investors to wire in their capital and never talk to you ever again. And some founders like this, some founders don't. And so I always want to be supporting a founder. And if there's any kind of like crisis moment, even if it's a Friday evening, Saturday morning, I take up calls with founders and support them with whatever challenges they have. Now, from a financial perspective, I wouldn't say it's. Let's just say it's a very expensive hobby, right? Pretty expensive hobby. The challenge is like a couple of things. One is that it usually takes about 8 months to a year and a half to reach your TG, your token generation event. And these are token projects. And then usually there's a 2 to 3 to 4 year lockup for the seed round. It only makes sense to get in at the very earliest. That's where the most risk is. That's where it's the most fun, and that's where you can have the most impact. So if it takes, let's say it's a 3-year lockup and then a year to reach your TG, that's like 4 years. So if you wire in your money today, you're looking at, hard to believe, by 2028 before you're fully liquid. So from a risk reward perspective, it actually makes sense to go do your due diligence on liquid assets and then take up a position there, right? And that is, I think, definitely, if you look at the projects I've been a part of in 2021, like from a time perspective and the opportunity cost of capital being locked up there and the risk, it doesn't make a lot of sense. So if you look, I'll give you a concrete example. Like Layer Zero is a very project, great project, another Vancouver team. They raised their most recent round at a $3 billion valuation about 2 years ago. So that's $3 a token. And back then, when they raised that round, Bitcoin was $21,000, literally. And so you could have put your money into Bitcoin and beaten. So Layer Zero is about $4 now. So that's like a 25% bump on what the seed or whatever that price round was. And so you would have made more money. And it's also liquid. Like Layer Zero's unlock schedule is only starting as of like last week or 2 weeks ago, right? So it's another 3 years of unlocks. So you're looking at a 5-year kind of commitment. So yeah, I think it only makes sense if you're an institutional investor to invest. Otherwise, it probably makes more sense to take up liquid positions. Now, I'm not an investor. I'm a builder, and so when you go to the liquid markets, it's less fun because you have to do a lot more work. So as an operator, it's hard to get your hands dirty if it's a liquid position. Yeah, but not investment advice, not financial advice. That's just generally my my read on the market. And the whole like FDV kind of thing is like, I mean, there are pros and cons, right? I think, if you don't have a high valuation, you have challenges with the exchanges and the custodians taking you seriously. Just simple matter of fact. And we face this issue, right? So I don't think launching with a low valuation, a fully valued valuation, is really an option these days because the competition is stiff. I saw I think there's going to be another like 4,000 or 5,000 tokens hitting the market in the next like 6 months, right? So competition is super aggressive. I heard another stat that there's an exchange called MEXC that's listing 300 assets a month. That's 10 assets a day. So that's the number of new assets that are coming on the market. So competition is stiff. And so you have to do whatever it takes to stand out if you want to survive. And I think in crypto also, capital is fleeting. So if you don't have an exciting narrative, if you don't have a strong army of supporters who have the conviction, it's quite challenging. So yeah, that's just certainly my take. I think it's super hard to get a project off the ground these days. I think if you have a hot space like DA or AI or execution environments, that's really nice. But if you're in the app space, there's not a lot of apps that have any meaningful traction, and traction is just a drop in the bucket compared to Web 2 kind of traction. And so it's very hard to get your app off the ground, especially from an investor sentiment perspective. So yeah, I think that's just how things are playing out right now.
Yeah, I mean, there's a bunch of good points in there. I mean, I think on the infra side, it's been the way that people are investing. I think that'll start to shift as the returns on some of these L2s and infra bets, don't do so well. I agree with you. Like for us, it doesn't make that much sense to, invest in like Series A, or like if teams are raising at like 200 million FDV or something, for being angel investors, it's like, yeah, you would need institutional capital to theoretically get the returns that you're looking for, especially in a bull market if the liquid market's doing well. So kind of learning these things as we go, and been a good ride. It's definitely an expensive hobby. It's fun to support teams early, and generally I think that this was a great conversation, and appreciate your time and a lot of your insights on the technical side, as well as just like understanding the ecosystem and the evolution of the space from your perspective. So thanks for coming on, and it's been a pleasure.
Andy, appreciate it so much. And let's chat soon.
Alrighty, sir.